Through the years, investing has become more and more accessible with new apps like Acorns and Robinhood that allows you to trade stocks and create a broker's account with little to no fees. Is now more time than ever to actually get into stock, but also can still be very intimidating. So the purpose of this is to get y'all to have some guidelines that can help anybody, no matter if you're investing hundreds or thousands into the market. Using these simple guides can help you navigate and help you reach your financial goals. This is the black market. So you decide to start investing. Okay, it's time to put my foot in the door. These are the little points that I've come up with to not only assist you in your financial journey, but also help you avoid some of the pitfalls that can happen very early on in your financial journey as well. So without further ado, let's get on to it. First thing we're going to look at is the principles of investing. These are key points that I was taught throughout my financial journey, and I think this will be very much assisting with everybody else as well. Okay, let's start with principles of investing. These are some points and advice that I've learned, that I've gotten throughout the years from various brokers and traders, and it's something that I still use to this day when I come to my investing, when I come to buying or selling stocks, or just no matter what I'm investing or what I'm doing with my investments. A lot of times I go look at these points and help me assisted me in my financial journey. So I hope it does the same for y'all. First point is only buy stocks that you understand. What I mean by that is it's easier for you to make strong financial decisions on buying and selling stocks, or look up on your stock and research your stock, if you understand the company that you're going into. If you like games, look into that. If you're into real estate and fashion, look up stocks that you're doing that. You have an iPhone, like Apple products and stuff like that. Or you like tech, look up more into the tech stocks, and you'll find yourself, not only because you know about it, you already look up on a daily basis as well, but also now you find yourself more in tune with that stock, and so it shows benefits. Even a lot of successful investors only invest in stocks they understand. Like Warren Buffett only invests in sea candies and a lot of insurance stocks, and so for various other people only invest in stocks, like throughout the years I've seen, only invest in stocks that they know. Because when you go into a place you don't know, you spend more time trying to learn how the company functions, and still trying to get ideas on what the stock is, and it can be very, very detrimental. You can, like I said, later on, yes, I'm very well recommend you looking up stocks, researching new stocks, researching new companies. But early on, when you first buy, your first initial couple $100 purchases, I think those should be the stocks that you actually understand the company and what they're actually doing. Next one is going to be buy at a price below the intrinsic value. Basically, that means is the basic concept: buy low, sell high, kind of concept. But basically, you want to buy low, but you want to buy lower than anybody the low, right? So if the stock starts at like $10 a share, let's say for example, and it drops to $9, try to get that stock at $8. And then same thing about selling too. If it sells at if it's at 10 and you want to sell it, it's your selling point. We discuss later on. Make sure you sell it at up higher than the normal selling point, or the average mean that people will sell it at. All right. Third point is going to be, don't sell unless the business fundamentally changes. That can be a number of things, which you can go into later on for reasons of sell. But it could be a significant increase in stock price, but that does not yield dividends. For example, if you have a non-dividend yielding stock, and you see a significant increase in the stock, more than 50 or 60% investment, right? So let's say it jumps to 100%. Let's say you start at $17 a share. You wake up next morning, it's at like $30 a share. That would be a good stop to sell it, because that significant jump in sale price, and if it does yield dividends, it may not. One, it may go past this, go past the market cap. Also, look and see what is the cap's at. But or let's just say if there's a merger, there is something that happens, a new CEO change. Those you want to kill onto the stocks unless it's something that drastically happens. It would be a drastic increase or a drastic change in structure, or if they restructure their stock. That's when you want to check. But hold on to the stocks unless there's a significant change, and it will help, which will help you on our next point. Invest by facts, not emotions. And what I mean by that is this: I would say a good 90% of people invest once they get a significant return. They base it off of, my choice of good piece stock, my choice of stock, not hey, I'm lucky that off of luck. Of hey, look. Which leads to our next point: invest by facts, not emotions. And what I mean by that is a lot of investors do what I like to call rearview mirror buying, right? They look at last year's market not doing right and go, this person made this amount of money, I can do more than that. And they push and push and push and push. Or better yet, they'll see like, okay, Bitcoin did all this crazy stuff. I'm gonna invest in this. I'm gonna invest in Bitcoin because that's how it's going. They look at how it happened, what happened before, what happened in the back, in the review, I like to say, and don't really look at researching the company as a whole and going based off of what they've seen or what they feel or what's going on in the market. The reason why we have what you call right now, even in this time, what you call a K-shaped growth, where the richer are getting up and people in the middle class and lower class is going down, is because when the market starts dropping, people start putting more into the market because they know that it's going to go back up eventually. So they start putting more into the mutual funds. So they start investing more into the market and into stocks that they know is going to go back up eventually. And that takes a lot of willpower, you should say, and focusing on like, okay, this is a fact. This happened before. This going on before. This going on. When the first happened, for example, and MGM was like at $5, it dropped to $5 back in March. I was like, okay, cool. This is the time to go into MGM because MGM is where they're cheap and it's definitely gonna go back up. And that's what you got. That's what you got to look at it. Invest by facts, not emotions. Look at the numbers. Numbers never lie. Look at the numbers. When you see stocks going down, when you see things going when the stocks are getting incredibly low, look at the history of the stock. Is there a current trend in a quarter? Does it happen? Is it something like that that's going to bounce back? Because a lot of stocks bounce back. As we speak right now, there's a lot of stocks that earlier in the month I didn't know that was really low. Fitbit, GoPro was $2 a share like a few months ago, and now they're going back up to 10 plus now. So you never know. Like I said, invest by facts, not emotions. It'll help you right away. Our next point is use a lot of information tools on a daily basis. What I mean by that is there's so many outlets out there that help look into the market. There's Yahoo Finance, there's Bazinga, there's so many information outlets. What you need to do is use them on a daily basis. Wake up, 10 minutes here, 10 minutes here. Look up your stock, looking up your companies, looking up other companies. But also there's double edge here too. Please avoid, I might type this somewhere, but avoid the buy now columns. Yes, people do it. Every say buy. Don't always buy everything they say buy. Don't always buy when everything that says to tell you to buy. Use your guidelines first. Look about what's going on first before you actually invest into it, because you don't want to avoid to say buy this. You end up buying everything they tell you to buy, and then next thing you know, it's not doing that well because all you're doing is just buying whatever they say buy in the next couple. Don't do that. If you see a good stock, and they do give good advice. I'm not saying they don't do that, but don't fall in the pitfall of just like looking on a website and just buying that because they say buy that. You definitely want to avoid that in any means. All right, so that's the principles. Now we can go to the next one: investing apps. These are the 5 investing apps that I feel as though are great, especially if you're a first time right now, especially first time investment. Robinhood is really, really good. It's a really, really good one right now. Simple. You can create a brokerage account for nothing. And the cool thing is it does not charge you to buy and sell stock. Before, in places like other apps, even Fidelity, they charge you for every time you buy and sell stock. It's like $5 here, but that add up. And sometimes that can be a deterrent when you want to buy and sell, because you got to tack on that extra price for that stock. So like, for example, if you buying stocks at like, $10 a share, now you're looking at 15, so that's something but Robinhood is really great. They started doing fractional shares now, which was a bad con for them. They actually have a credit card you can get into, a debit card you can get, and also they are now starting where you can reinvest your dividends into Robinhood as well. They got into cryptocurrency. I highly recommend Robinhood. I highly recommend Robinhood if you are a first-time investor and you're looking to get into a stock. You just put, a few hundred in there, pick a little stocks you want to do, and watch it grow as well. It's very great. M1 Finance is good too as well. They're a little bit smaller than Robinhood, but they also have too much similar things to Robinhood, but I think they also help out with retirement accounts as well. Acorns has been a while too. Acorns is good. My thing with Acorns is it's one of them things. I like it. I call it the poor man's mutual fund, right? Because what it does is it takes out everything you swipe and they put it into what I like to call a Vanguard fund, where it goes into multiple other safe stocks, and you have no control over it, but you don't see it, and you swipe and it'll increase. The more you spend, the more it'll put into the stock market, and then more and more it'll grow. So Acorns is really good if you just want to have it and just sit, have your money sit, and you don't really want to worry about it. They have only thing about Acorn too, they do have subscription plans, like $1 a month and like $2 a month and $3 a month, and they have different options for that. But I would say just give it a shot. Just put it on one of your debit cards you use. We get a cup of coffee every day and stuff, and just watch it and see if you get some significant from it. Webull is good if you want to start day trading. Day trading, it has its plus and minuses. It's pretty much gambling. Pretty much like gambling. It's a gamble. It's high risk, high reward. It's very tantalizing. It's very attractive. You'll see people online saying, "Oh, I made this much money day trading." Every time I turn around and somebody's talking about getting the stock, there's always somebody in the background, day trading. I'm like, it's high risk, high reward. It rewards due diligence. It rewards effort, but also it's very mixture of luck and mixture of diligence. So it's like gambling. And you go to the casino, you see people win money, but a lot of people lose money too as well. So Fidelity is good. It's great for you want to do mutual funds, you want to do index funds, which we'll talk about in a later video. It helps out with your 401k retirement. If you want to if you go into the long-term, the more long-term investments, when you go to bonds and funds, Fidelity is great for that. Do not use Fidelity if you want to trade, because they still charge you. So you charge $5. So if you wanna buy stock, I would say go to Robinhood and finance. You want to have just a small mutual fund, you can go to Acorns, and then you want to day trade, go to Webull. And then Fidelity would be your mutual funds, your index funds, all stuff like that as well. This is just for simple stocks too, because stock options is a whole nother video that will go on later on too as well. But Robinhood also offers stock options now as well in finance, which is really cool. Next up is going to be dividends. The reason why I brought dividends on here, obviously there's a partial thing, but there's a lot of, I would call it a pitfall, but a lot of times people use the word, oh yeah, dividends when you first go into stocks, and I see a lot of confusion when it comes to that. So I figured I would simplify it up enough to let you know this is what it is, because sometimes it can be very follow the it'd be very hard to understand what it is. So it's a more simplified touch view onto dividends, right? Well, dividends are defined as a stable and growing income stream, pretty much profit share. But there's 2,000 dividends you need to focus on. First one is cash dividends. Cash dividends is the most common dividends in stocks, where companies will generally just pay cash directly to stockholders, brokerage account. Now, keep in mind, they only pay out dividends if there is profit that quarter. You won't get dividends if it's going on a low. And there are high yield dividends and low yield dividends, and sometimes dividends can increase. Sometimes dividends can increase and decrease how much dividends they give out. There's also stock dividends, which the company will pay cash. Well, instead of paying cash, they will pay investors an additional shares in stock. So, just when you look at that, when you hear dividend, the word dividend thrown around, basically it's just a profit share. But make sure that you're aware which ones you're giving out, and that make sure that it's a company that's actually has a steady growth in it, because especially with REIT stocks nowadays, I'm just going to be honest with you right now, REIT stocks nowadays have a lot of dividends. They give a high yield dividends, but they also in a lot of trouble right now because of the current situation, especially if you live in the state of PA. A lot of the REIT stocks in there has been seeing a loss of significant amount. So they're giving a lot of dividends, but they haven't shown they haven't shown profit in like 3 quarters now. That's something to definitely keep in mind. Now, these are what I call the pitfalls of trading. Why I call them pitfalls of trading is because they're high risk. They're high risk, high reward, but also that's the one thing that every time you hear about trading, you hear going to stocks, especially nowadays, is these two things. I'm always hearing these two words pop up with somebody asking me, or somebody in the room, and somebody else is pointing out like, you should do this, or do this. And this is day trading and cryptocurrency. So first we're gonna start with day trading, because I got a lot to say about this. So you'll hear this word scalping. And scalping is basically buying it at the lowest price possible and selling it at the highest point possible as well, right? So, but with day trading though, it's the act of buying and selling stock that day, or within a day or two. Mostly you do it within that day, right? You have to have the ability to take risk, right? You have to use agile practices. Basically, what I mean by agile practices, you gotta be like on it like money. Sometimes you start trading within an hour. It's frequent trades. I say it's a highly advanced method of trading. Yeah, they're playing with house money, and I don't think anybody can tell me otherwise. Like, yeah, they're successful with it, but they're successful in gambling. They're successful poker. They're successful in Vegas. But realizing that you are not the exception, and these are the exceptions, will lead you out. Can you make money day trading? Yes. Can you make money and there's significant success in day trading? Yes, but it's few and far in between. A lot of people don't do it. If I say day trading, you can day trade, but I would say don't even put. There was an article I read that said 80% of day traders found a loss of up to 33% by the end of the year. That means that, and by the end of the year, people had lost 30. They put $100. You only you made back. You made 70. You put in 100, make 70. You basically just pay taxes on it, and it's like that. So, yeah, you lose some wins, but in the day, you probably you most of the time people net. I would say when you first starting off, at least avoid day trading. If you do, just be like I said with the principles of trading. Trade by facts, not emotions. Temper your emotions. A lot of people like day trading is one of the things that it starts early. A lot of people get out of it within 2 years. Like I said, unless you're playing with somebody else's money, a lot of times with day trading, it's probably not the place to go. Now, cryptocurrency, which is a decentralized financial system that's stored via blockchain. Basically, cryptocurrency has been taken away by storm for a couple years now, and it's good. Like, it's a good alternative way of currency. Is great. It's protected on a blockchain, which is a big tech, which is extremely secure. It's unparalleled transparency. It's got 24-hour accessibility. Some of the little cons about it is it's challenges and market fluctuations. Like, it's, Bitcoin, like it'll go ups and downs. Well, not Bitcoin, cryptocurrency it has its ups and downs. It's very tantalizing. It's a great thing. I would say invest in at least some amount of cryptocurrency. 10 years, Litecoin 10 years ago, 5 years ago, 3 years ago was like $2 a share. So like now it's at $100. So it's something to look into. I wouldn't put too much money into it right away. Find a cheap, smaller cryptocurrency that that's going to progress over the years. Keep an eye on the news, see what they're saying. There's new legislation laws going up for cryptocurrency. So make sure that you keep an eye out for that and to do your due diligence. It's not as bad, and just avoid the look at it, because that's another thing to invest in. People are like crypto, and like it's cool, and it's a good word to throw out right now. And it's like I said, there's nothing. I have no bad things to say about cryptocurrency. Just be careful what you're investing into. It's always good to invest in Bitcoin too, but let's make sure you're doing your due diligence with that. Also, another point I want to point out there is absolute anonymity. For better or for worse, you are completely anonymous when you use the money, when you use Bitcoins, right? Nobody know who you are, where you come from, and like that. Not like a credit card when you swipe it and they know all your deets. So, for the better or for worse, that can be, something to take a look at too. All right, now let's go back to the fun stuff, right? And that will be this thing is doing. And that okay. And that would be 2 points. Like the big thing is stocks, right? Reason to buy and reason to sell. First off, the reason to buy would be if the price is right for you. So if the price is right for you, and that's the buy low is it right? Is anything? If you have the ability to buy Amazon and it's at a certain price, you have a price point that you like, okay, fine, this I want to buy Amazon at, and buy it. If it's at a certain amount of dollar sign that's within your budget, buy it. But then figuring out what your price is great too. But buy when the price is right for you. So if you have, if you're coming in with, let's just say you're coming in with $500, right, and you want to diversify your stock, obviously. And there's a very good stock you research, and you're like, okay, once this price, the stock go to $10 a share, I'm gonna buy it. Once it hit that price, go ahead and pick that bad boy up. But also invest in one that has long-term value. Long-term value is investment. One point in investment is long-term, right? Unless you're doing day trading or you want to go in for the long run. So look at a lot of companies that have long-term value. Maybe we start up like the cannabis companies that have as the years go on and more legislatures pass, they're increasing. So make sure if when you're buying things, you see that okay, this stock is going to have long-term value. See that the company has a strong financial health and outlook. So if the company's looking strong, like obviously, like these companies like Ford and GM, they will always have look for a company that has a strong and financial health and outlook. Just do your research on the company. If this company looks like it's going to be for a long run, they open up new things, becoming more innovative. They're changing with the times. It'd probably be a good company to look into and put some stocks into it, because a lot of times it's a good sign that stocks are going to increase in the future. Disney is like increased over 100% in the past year, more than 100% over the past year. When I first saw them, they was like selling at like $60 a share. Now they like 153 bucks a share. So that's a company that has a strong financial outlook, health and outlook. They put time into it. They've been up buying other properties, and it's been yielding a lot more profit for that as well. Also, buy when the stock is undervalued. When the stock is undervalued, basically the stock has a great performance, but the market still is unwary for it, so it hasn't seen any increase yet. And this will be a good time to pick it up, because when the increase comes, you can be ahead of the game. And lastly, when there's certain downturns, specifically when there's like what's happening right now was a pandemic impacted. If for example, like when MGM and a lot of other companies went down, or like a lot of these sports bettings, like Scientific Games, they went significantly down because there was no there was no sports betting, but it's going to happen to come back eventually. Buy up those stocks that that they are down now, because obviously they have no revenue coming in, or they're shut down. but it's gonna pop back up again. Downturns happen a lot, very often. But we're in a rare time when the downturns happen and we know which one's gonna come back up. We know the MGM is gonna go back up. We know this is gonna happen. We know, let's just say like movie theater is gonna open up again. So maybe buy some movie theater stocks and stuff like that. So that's always the reason to buy. Moving on to our last and final reason is reason to sell. It hits your target price. When you always buy a stock, you should always think about the target sell price you want to be. Right? If you buy a stock at let's say you buy a stock at, I keep saying this, at $5 a share. You're like, okay, fine. Well, I'm gonna sell this when it gets to $20, $30 a share. This is my sell price at, right? Once I hit that sell price, bam, sell it. And that's simple as that. If there's deterioration in the fundamental, if you see GM, this may sound kind of crazy, but let's say you see GM or Ford start selling ice cream, maybe sell it. Because there's other ice cream companies out there. If it's a change in how the stock the company fundamentally works, it'd probably be a good time to change it, because that means that the final 3 points I'll show you, it might be affected. After a merger, if a company merges, sell it. When if a company ever has a merger, there's going to be a lot of restructuring that happens that is going to affect the stock, and also it has a big strong effect on what I said before with the financial health and outlook of it. Also, you want to sell after bankruptcy. After as soon as you hear a company declare bankruptcy, sell it. Sell it right away. Don't stop. Just sell it. There's no point. Just get off the ship before it sinks. Also, you reason to sell is the bottom line. If you have it kind of hits. If you buy a stock at a certain point and it's starting to go lower to the point where even if it goes back to normal, it will be significantly less than you got it for. Sell it, count your losses, move right on, because there's no point in staying on with the ship. I would say if it drops significantly, more than 50 or 60% in a certain quarter, I would just drop that bad boy. But yeah, this is mostly all the points that I got right now. Not all I got right now, but these will help you get started. We'll talk about more. I'm going to do weekly top 5 stocks to pick under $5, under $10, under $20, under $30. If you like anything I had to say, please leave a comment down below. Like, subscribe, I guess. If you don't, like I said, let's start a discussion. If you like what I got to say, you have any more questions, please enter in the comment down below. This is the black market. I'm designed here to help you understand the stock market better, understand getting your feet wet, not try to use all kinds of crazy terminology that you see on here, and just spread what I know. Spread some of what I was blessed to be able to learn and grow my financial future with. So hopefully this is helping out with your financial journey. Like I said, this is the black market, and I'll see y'all soon. Peace.